Hey guys, what's up? In this video, I'm going over how I made $592 from trading SPY options. I'm going to walk you through step by step how I did this, so not only you can see it's possible, but also learn the reasoning behind so you can do this for yourself. So anyways, if I'm breaking down, first I want to prove to you that I did it. So again, you guys can see here on my closed trades here, SPY, I entered on April 24th, expiration of May 12th. These were the details. I collected 28 cents of credit. I traded 25 credit spreads as my size, and I made $592. Now again, if you want to use this credit spreads tracker, you can. It's completely free and it's linked in my bio. But anyways, if you want actual proof from my broker, here it is. You can see here I bought in on this date right here. Sold on this day right here and made $625 minus fees, roughly $592. So anyways, looking back at the platform, here we go. So right here is April 24th where I bought, and then I ended up selling around this right here on May 10th. I closed out the trade early. Now again, this is kind of what we're looking at here for the profit range. I ended up making roughly 16% on this trade. So yes, I did have to put up a decent amount of money for this trade. I put up roughly $4,000 roughly to put on this trade, making me roughly $600. So that's kind of how it works in the credit spread trade world. So anyways, let's break down the details. So if we're looking at the overall market being the S&P 500, what we saw here is that the market was trending down. If we can see here in this phase, we have a downtrending phase. Why? Because the highs are getting lower. Next thing you know, we break this trend line and showing that we're starting to push higher. So when we break through a trend line, then we draw a new trend line towards the opposite direction. You can see here, we have an uptrend, it breaks this line, it comes down, downtrend, breaks this line, then trends up. Well, that's exactly what we're seeing here is a strong trend up. So because we're trending up, I followed the exact rules that I give you every single time, including in my trading handbook, which is if it's trading up, take the current close price, go 3% below that price, and that is where your strike price would be. Let's see the specifics here. I believe it was $403.98. So right here, I entered here and I went all the way down. I was able to go down to 3%. I could do 400 right here as my strike price. Now, why does this work as a good strike price? Well, number one, it's the strategy I follow. My systematic approach is go out 3%, and that historically and an uptrending market gives me a 90+% win rate. Not only that, this 400 level is a whole dollar level. 400 is a whole dollar level, is a very strong area of resistance. Not only that, if we can see the support line right here coming up, or this trend line coming up, that it would have bounced around 400. So this would have been a great support level for it to bounce regardless, even if it came down the slow. Anyway, so I'm setting my level at 400. This means that since I'm trading or selling credit spreads, that as long as the stock stays above this level by my expiration date, then I get to keep all the money they gave me, roughly $625. Now, if I'm looking at this trade, it started to go against me, but again, I kind of let these trades play out. I only start to manage early if we're in the last week of trading or last 3 days of trading, then I start to manage the trades. So there's nothing I really have to worry about here. I was really just set it and forget it on this type of trade. Then I woke up here on Wednesday and I actually kind of closed out of this trade because I was going to a conference that week, a hedge fund conference, and so I decided not to worry about this trade because I knew a lot of volatility was going to come into the market. Ended up buying back early for roughly 3 cents, and so that's how I collected and made most of my money. I sold for roughly 28 cents and then bought it back for 3 cents. So I made 25 cents per contract and had 25 contracts. That's where I got to roughly the profit that I'm at. So that is kind of how this trade went on, and that's how it was set up. This is my SPY trade. Again, if you want to be able to track your own trades, you can use the credit spread tracker linked in the description below. But anyways, you're wondering, okay, Austin, what's the general gist behind this trade? Identify the trend. What trend are you in? And trade the credit spread that aligns with that best. If you're trending up, sell a put credit spread. If you're trending down, sell a call credit spread. And again, it's always best to sell your put credit spreads on red days. So if you can do that, that's awesome. All right, guys, this is Austin from 10% Credit Spreads. If you enjoyed this video, smash the subscribe button, and I'll see you in the next video. P.S. I have a masterclass or a credit spread masterclass going on right now. So if you click the link in my bio and actually check out this credit spreads tracker that's completely free, you have to put in your email though to use this, then you'll also get that super secret credit spreads masterclass. All right, guys, see you in the next video.